Again, thank you for joining today's webinar, Fundraising to Finance, How Nonprofits Overcome the Challenges of Disconnected Fundraising in Accounting Systems. My name is Brian Allen. I'm the Territory Channel Manager for Microsoft Tech for Social Impact. And on behalf of Microsoft and our partner Sylogist, again, welcome. So I want to go through a moment to do a couple of housekeeping items. Number one, this meeting is being recorded, and the video recording will be made available to everyone on the call and everyone that registered to attend the webinar within 5 to 7 days. That's generally the turnaround time. Audio and video has been disabled for the meeting to ensure a quality meeting with minimal interruptions, I should say. So, but we do encourage you to ask questions, and please feel free. We're going to be on standby answering those questions in the chat. So if you have a question you'd like to ask, please, everyone, go ahead and ask those questions in the chat. With that, let me take a moment to introduce our partner, Sylogist. Sylogist was founded in 1993 to serve nonprofit, government, and private sector organizations, and is a Microsoft partner that provides ERP, CRM, fundraising, education administration, and partner solutions that allows customers to carry out their mission. And I'm delighted to be able to pass it off to Michelle at our partner Sylogist. Michelle?
Thanks, Brian. My name is Michelle Kosin, and I am the Digital Marketing Manager for Sylogist. And I'm going to be starting out the presentation today, and then we're going to hear from Chris Stevenson and Mark Sutton, who are my colleagues from Sylogist. So as Brian said, our goal for today is to discuss how nonprofits overcome challenges faced by disconnected fundraising systems, CRM, and fund accounting systems. So we're going to go through some of the key challenges and opportunities that nonprofits face, discuss some of the issues that disconnected systems present, and then review how nonprofits are using connected platforms as a solution, and then talk about some best practices, and then show you a little bit of some screenshots of our product right at the end. So the first thing I wanted to start with is this survey from Statista, I think it's called, and it was of nonprofit employees in 2021. And the major issues that they cited were staff shortages, limited capacity, remote work, software and technology, difficulty cultivating donors, and then the list goes on, but everywhere there's an arrow is something that we're going to address today. So they fall into these categories: changes in giving, so that's the giving market, donor attitudes, and what the market looks like overall. Then we're going to talk a little bit about donor trust and organizational accountability. Then some of the organizational structure and resource challenges and opportunities that nonprofits face. Then the importance of personalized donation asks, and then relationship building with donors. And then we're going to finish up with some of the challenges with the current software and technology that most nonprofits have, and then also discuss the limitation of out-of-the-box non-purpose-built financial software. So the first point we wanted to talk about was the giving market, and you can see from this slide, in general, in the U.S., the amount of giving has stayed pretty flat over the last couple of years. In 2021, it was $485.85 billion, and the largest percentage of those donations came from individuals. And if you see on the pie chart there, there's individuals, and then the green is giving by a bequest. So that's people that give donations via their will. So those together is over 70, almost 80% of donations. And then in Canada, they've been seeing a bit of a downtrend, which is not unexpected. And there was, up until 2018, there was a more upward trend, and it's gone down a little bit, but not anything major. But the good news is for both the US and Canada is online giving continues to grow. And in the US in 2020, it grew by 32%. And then in Canada, it's really exploding. It grew by 86% in 2020. So we definitely think that online fundraising is not a trend. And for that reason, you really need to have some great fundraising software to engage your donors online. And then just a quick note about the demographics of people giving. As you'll see, millennials and Gen Xers are on the younger side, and they prefer to give by online donation. They respond best to things like social media posts and email and text messages. And then you have the baby boomers and the greatest and silent generation. They're a bit more old school. They're baby boomers like online donations, but greatest and silent generation are more likely to respond to direct mail and phone donating by phone. And just, as of right now, the right-hand side, they're giving the bulk of donations, at least in the U.S. But as that generation continues to age, we'll definitely see the millennial and Gen X side, starting to account for more of that portion of giving. So having a plan that incorporates something to hit both populations, or the two categories of organizations, or I'm sorry, the two categories of donors is really important. And then the other thing that's a bit of a challenge is in 2017, US tax law was changed, and the standard deduction was doubled. And unfortunately, that has made it where there's not a ton of financial incentive for middle and working class Americans to make charitable donations. And according to the the National Council of Nonprofits, that's creating something they call giving inequity. The most donations come from the higher income donors, but the middle and working class are definitely an important demographic that you want to have a way to engage with and make sure, even though there's some differences in the tax law, there's still ways for them to engage and donate. And then finally, the nonprofit market, there is a stigma against spending any money on overhead costs. So that's, staffing, rent, utilities, all of the things that aren't passed directly onto the donor. And nonprofits are always talking about their efficiency rating, which is what percentage is overhead versus what goes back into the mission. And just a sample of it from a 2019 study. Staple companies, those are food and household items, they had an overhead or indirect cost rates of 34%, and technology companies were as high as 78%. But there's still an expectation that nonprofits are as close to zero as possible. And that is definitely a challenge to overcome, and spending money on things that will be considered indirect costs can be a little bit of a hard sell initially, but it's still a really technology and software is still a really important area to invest in. So next, it's really important for organizations to build and maintain trust with their donors, and also grant funders, federal entities, anybody that's supporting with donations or grants. So in order to build that trust, they need to ensure that they're transparent with their accounting. Unlike private companies, nonprofits, income statements are available online. Anybody, I think over $5,000 is required to submit one. So there is a really high expectation of transparency. And if you don't have the right systems in place, it can be really difficult to pull real-time data and share things with, whether it's internally with board members or externally with donors and other stakeholders. Another thing that can be a challenge is demonstrating the impact of your organization. And again, if you don't have the right data or you aren't able to combine it properly, it can be really difficult to show exactly where donors' money is going, and showing that you're properly stewarding it and spending it wisely. So not having the right software in place makes that really difficult. And then maintaining trust, two of the big things there are data security and fraud prevention. This is something that nonprofits, just like for-profit companies, have to deal with. So you're wanting to ensure that any of the software that you're using maintains a really high level of security and also has things built in to guard against fraud, and that even can include internal fraud. And it's not really something that's advertised, and nonprofits are kind of de-incentivized to report internal fraud. But 2018 Boston Globe expose found that there were more than 1,100 tax-exempt organizations in the U.S. that reported embezzlement. So having a really high level of visibility from the top down of your organization is really important, so that you can ensure that you keep your donors' trust and ensure that there's no fraud going on. Next, some shifts in organizational structure and resources. Some of the challenges with staff, I think everybody knows, is not having enough staff, too much work, and not enough time to do it, which leads to burnout. Some nonprofits have a really high turnover rate, and every time someone leaves, all of the data that they have in their head and donor information that they have that's not written down gets lost with that person. So having a set of systems that track that donor information is really important. And technology time sucks, so spending a lot of time pulling reports and making spreadsheets and pulling stuff from 5 or 10 different systems to try to get an overall financial picture really takes a lot of the essential time that nonprofit staff should be spending building relationships and fundraising and doing program work. And then the other big trend that we're seeing, this should be no surprise, is that there's been a large shift to remote work. Pre-pandemic, in March 2020, about 70% of people were working in office, and about 25%, about 15% were remote or hybrid. And then we kind of saw a flip of that. So in 2023, right now, there's less than 10% that are fully in the office, about 35% that are remote, and then the rest are all in a hybrid, so combo of in-office and remote. And having remote staff means that you don't necessarily have the same abilities with your software implementation. So having a cloud-based solution is really important, because you want those employees to be able to continue to do everything they need to do, even if they're working remotely. Next, another essential thing for nonprofits when they're putting a campaign together or doing an annual giving campaign, a monthly giving, pretty much anytime you ask for a donation, giving is really personal, and you want those asks to be as personalized as possible. And if you don't have a full picture of your donors, you don't have a full picture of your financial real-time data about your finances, it makes it really difficult to personalize asks. And without the kind of automation features, doing one ask at a time to each donor is not really realistic. So and I just like this quote, but this is from Jeff Gideons, who's a nonprofit consultant. He said, I've heard that best practices, if you repeat them often enough, sometimes become pooled ignorance. And that's just to kind of, highlight that change is hard for nonprofits, and there's a lot of barriers to implementing new software and new systems. So, you're always trying to fight against that. We're doing it because we've always done it this way, and changing software and implementing new processes can really help overcome, that kind of institutional behavior that you maybe want to update and modernize. And then in addition to personalizing asks, you want to make sure that you're building really meaningful relationships with your donors. And as I said earlier, about 77% of donations in the US in 2021 came from individuals. A survey on donation trends, 73% of respondents said individual donors are the key to their fundraising success. And about 70% of donations come from one-time donors. So even though you're working to build personalized asks and all of those kind of things, you want to make sure you're still focused on the individual, as opposed to maybe corporations or grant making, depending on how you get your funding. But you want to make sure you're remembering that individual donors are most likely giving a large percentage of your income. And then in addition to making sure you're addressing individual needs, there is a best practice is to have monthly giving or year-round donor retention strategy. And, retained donors tend to donate more often, and they tend to donate more overall. And if you get someone into a monthly giving program, they're automatically donating without needing to think about it. And the survey from Nonprofit Tech for Good found that only 39% of nonprofits had a year-round donor retention strategy. So that can be really hard to implement if you don't have the right infrastructure in place, and can hinder your ability to build meaningful relationships with your donors. And at this point, I'm going to turn it over to Mark Sutton, who's going to talk about how nonprofits use and value technology, and some of the things that he's seen in his experience around technology and nonprofits.
Yeah, thank you, Michelle. And just in follow-up to the context that you've provided, I'm really going to just, kind of talk a bit about where we are right now with technology and kind of how it's used. And then as context, pass it over to my colleague, Chris, who's really going to kind of dive into the specifics of the fundraising to finance. And I think this context is really essential. I have been involved with technology for nonprofits for 20 years now, and early 2003, I started one of the first peer-to-peer fundraising companies here in the United States, and it was used by all kinds of organizations for peer-to-peer events, fundraising, and so on. And back at that stage, there was really the challenges that we were faced is just really trying to ensure and convince organizations that online fundraising was safe. It was here to stay. It was something that was reliable. All kinds of concerns about whose demographic was right for online fundraising. So needless to say, a lot's happened in that period of time. And as you can see here from just some of the statistics, which aren't going to be surprising to anyone, technology is fundamental to just about every single organization out there. Everything from online fundraising, which has become a staple. CRM systems of some sort or another are used by the overwhelming majority of nonprofits. And a lot of what has driven this has been SaaS-based systems. So, one of the points that Michelle made was people now working remotely or working in various offices. The SaaS-based systems have made technology far more accessible for organizations than what was available a while ago, where organizations can now really focus on using the technology versus the installation, the hosting, the infrastructure, the updating of technology. So that's kind of been a very transformative aspect of things. I think that the other key marker was technology started to be embraced by individual groups within nonprofit organizations. And so the tools that would start to be embraced would be online donation capabilities of one form or another, email marketing tools, auction software for the annual gala, registrations for events, peer-to-peer fundraising technology, CRM, and so on. And so what happened was various silos emerged. So the events group had a various set of technology tools that were used. Annual giving had some. Other areas, the development officers had other bits of technology, marketing and finance, and so on. And so, really, onto the next slide, Michelle, if you would. As technology proliferated, in terms of making tasks easier, other challenges started to arise related to end-to-end workflows, knowledge sharing, and silos of truth that sort of ended up evolving and becoming established in nonprofit organizations. And so, as we stand here today, and really over the last little bit, it's been the connecting of these tools and systems that has become an area of focus. And really over the the last handful of years, for me in fundraising and online technology for nonprofits, the idea of trying to connect platforms and bring things together, integration and all-in-one have been real key buzzwords. Any of you who are going to AFP or N10, it's something that's quite prevalent, and it's also something that's not very easy. So many systems will play well with others, some don't because they're legacy. There's been some really great advancements, I think, made in these areas. In particular, the connection between some of the fundraising tools that exist and CRMs. And so as we kind of get into the final slide before I hand it over to Chris, we'll dig into the specifics of fundraising to finance. There have historically been trade-offs that nonprofits have had to make, and really between best of breed and connected or interconnected systems. And so in many cases, the systems that were best of breed for whatever you're doing, whether it's online auction software or online fundraising or CRM, they maybe were the simplest or the most powerful, but they were not necessarily the best connected to other systems. And so it's really been a choice that in many cases has had to be made about having the best software available for the purpose, and also having the connectivity. And in all too often, it's the connectivity that has been the challenge and has been the thing that's sacrificed. And so, not even tools offered by the same company were necessarily assured for simple integration. And a lot of times they came about via acquisition by those companies. They were built by different teams within those companies. And just the challenge of really connecting the tools has been a substantial challenge. And it's been expensive, complicated, and at the end of the day, the results were not always that great. One of the things, as we'll get into, the Microsoft platform has really paved the way for changing this. It's paved the way for connecting many of the essential systems through MC4N, through Business Central, and the way that these platforms can be connected like they never have been before. And so removing silos and providing the benefits of both best in breed and integrated systems, it's really no longer a choice. And with that, I'm going to pass it over to Chris, who's really going to dig into, primarily the connection between the financial aspects in the ERP, the CRM, the fundraising, and how on the Microsoft platform, these things are really now not only best of breed capabilities, but also the integration that so many seek is also a reality. Chris, over to you.
Excellent. Thank you, Mark. Appreciate it. Okay, good. So just kind of diverting just a tad, we'll come back to that whole concept of disconnected systems, and I'm sure everyone on here can appreciate that as an issue, right? I think one of the questions that we get from so many of our customers and prospective customers alike is there really anything in the market that really addresses this realistically, right? At the end of the day, there's a lot of moving parts when you think about, CRM, and engaging donors, handling the fundraising business process, then over to finance, and then all of what's in between from a reporting standpoint. And clearly there is. But one of the things that just really quickly wanted to highlight, because again, coming from the kind of the ERP side of the house personally, having done this for 25 some odd years for nonprofits, one of the things that is overly apparent, and I think our customers and then the market at large is starting to appreciate, is that, can I do what I need to do with standard accounting software? And in some cases, the answer may be yes. In more cases than not, though, what we find is that there's specificity around the business requirements that would suggest, as an example, and a key example, is the ability to make sure that you organizationally are able to account for both unrestricted and restricted funding and revenue, and why that's important. Because from a donation or donor perspective, that funder or donor is very acutely sensitive to, as we all know, how their money is being spent, what purpose it's being applied to, et cetera. So the need for nonprofits to track unrestricted and restricted revenue kind of sits at the top of the food chain, because everything else, hopefully from a systematic technology use perspective, kind of feeds that as a primary objective. So we do very much pay close attention to how well accounting systems are architected. And again, we have a solution certainly that's built, as you might expect, to do a lot of what we're talking about here. But I would, suggest that we all challenge ourselves to say, with any system that we're choosing to adopt, use, expand, at the core, are these considerations really in place in terms of what we need to do day to day? So obviously on the unrestricted side, examples being mission activity, staff salaries, devoting funds to, as needed to employee training, and again, those kind of discretionary uses versus those that may be uniquely restricted for a particular purpose. And again, examples of those being, foundations, for those of you that may be connected to that sector, and then others where either through individual donations or institutional funding via things like grants, are there specific missions, programs, and things that those monies are designed to support? So just making sure that the accounting system is sensitive to that, we see as a very, very key ingredient to any application of technology within a nonprofit, particularly from a business application perspective. So next slide. Okay, so taking this down maybe a step further to kind of really recognize, when we talk about the management of funding, right, whether it's through individual donations or institutional or grant contracts, cooperative agreements, whatever the case may be, some of the standard nonprofit requirements would suggest, are we able to maintain balances between funds? In other words, if we've got activity that crosses funds, or better yet, as we organize our accounting system and software, are we able to discretely manage revenue and expenses by those specific funding sources? And then recognizing the release of restrictions. So when that does occur, what is the process to do that in a compliance kind of way, where actually we're moving from an unrestricted scenario, or excuse me, restricted scenario to unrestricted. The other would be things like tracking commitments and encumbrances. Now, a lot of times I think, many nonprofits consider that more governmental in construct. We're not necessarily a high procurement cycle organization, or that's feedback that we may get from time to time. I think versus the concept of commitments and encumbrances as a standalone feature, it's more about proactive management of expenses. So the idea of knowing at any given point in time where we stand against budget for a particular fund, program, activity, if you will, however you're structured, to analyze that data, where do we sit? And a lot of times it's not good enough to wait until the expense actually occurs, where the invoice shows up, but how about, at the time that the request is made by an individual program manager, department head, maybe a senior leader in the organization, to know that that request is coming so that we can go ahead and ping the budget immediately and have immediate visibility into available funding across those various categories of analysis. So, commitments and encumbrances is really just the tooling side of it, but the real, I think, benefit that nonprofits are really looking to derive at the end of the day is managing those expenses in a very proactive manner. And then lastly, and this is where the rubber meets the road, and I'm sure you'd all agree, is that it's good to have all of that good accounting data that's centric to a nonprofit business, but how easy is it to get that information out and report it accordingly to not only internal stakeholders, board members, et cetera, but also to, most importantly, our external funders and those folks that, from a fiscal accountability standpoint, we owe them those metrics and performance reports to illustrate our effective management and oversight of that funding. And then you take all of that and consider the fact that, well, that all may look different depending on the funding source. And that's where the complexity really shows up. And that's why at the end of the day, whether it's CRM, accounting, some combination, there has to be some sensitivity to these complexities. The standard out-of-the-box CRM or out-of-the-box accounting is going to force a lot of workarounds and things that aren't necessarily available immediately out of the box. So the goal would be here is to make sure that the technology is built in such a way that these various complications by funding source and so forth can be handled quite effectively through a single solution, or at least certainly a single platform, which Mark mentioned earlier, and we'll expand upon that here in just a second. Next slide. Okay, so what does that all mean? And again, we're going to pick on really a lot of what we do here at Sylogist Mission, but at the end of the day, a system that's really going to effectively manage the day-to-day operations of a nonprofit should certainly have these key ingredients in mind. And that runs the gamut. Of course, we've talked about donor management and fundraising, in effect, engaging donors, handling the pledge activity, obviously the contributions that are showing up, whether that's through online or some other mechanism, managing campaigns and appeals, and certainly, setting forth the designations of that funding to appropriately map to the associated restrictions and funding mechanisms in the accounting system. Executive management, certainly, one of the key pillars here is to make sure that, data is being made readily available to senior leadership and those that are accountable, again, to not only the organization and the board, but also certainly, again, to the funding sources to make sure that they've got ready-made visibility into the performance, not only financially, but also how, the impact of the programs, monitoring and evaluating, how the funding is making a difference, right, for a particular mission or orientation to the organization. Financial operations and procurement obviously is very, very key and core to a lot of what we've talked about, and that's obviously tracking and managing, the financial activity as it comes in the door. And then the procurement piece, again, we talked about relative to proactive management of expenses, but being able to capture very early on in the process, those expenses as they're on their way, and then obviously as they're booked, to be able to reduce budget, again, in a variety of ways, whether that's by funding source, by program or activity, et cetera. And then the fourth pillar there is a key one, and that is if you're engaged in institutional funding, whether that's through awards, grants, contracts, cooperative agreements, some combination, the reality is those can be very, very challenging funding sources to manage, given things like indirect cost that needs to be calculated and managed and reported against. Revenue recognition. At what point do we recognize revenue? What is the method of invoicing the funder to make sure that we've got a good, clean path toward revenue recognition? How do we manage milestones and reporting back to the funder? And again, all of these will be typically unique by funding source. So it'd be nice to have one kind of indirect cost rate, but we all know that that can change depending on the funding source. So that gets to be a level of complexity that with any financial system structured and geared toward nonprofits, there has to be sensitivity to that. Otherwise, we're spending a lot of time in spreadsheets, external applications, and then obviously the manual transfer of data from those external systems to the accounting system. So it would be nice to have that all sitting in one place. And then supply chain and material management. Periodically, certainly there are nonprofits, and many of you may experience this today, where there are goods that you manage, inventory, warehouses, bin locations, the ability to manage the supply and demand that you may have across your community of mission work or donors as they contribute. Maybe there's gifts and things that you provide, but we do periodically see a fairly hefty inventory, material management type requirement that exists within nonprofits because I think there's some notion that, well, nonprofits don't sell goods. Well, I would argue that no, that's not necessarily the case. We see plenty that do that. And if they're not selling those goods, they're certainly utilizing those goods to deliver work. And therefore, those costs need to be tracked and managed. In some cases, maybe those are given as gift in kind type donations and the opportunity or the need to track the value and make sure that's all associated to the programs and funding also becomes key. And then lastly, payroll and human resource. We all know and appreciate that in most nonprofits, your biggest cost are your people and the labor associated with delivering your services and or mission or some combination. And certainly having the ability to onboard employee data, certainly process payroll, do labor allocations out to the various funds or programs to make sure that costs are being booked properly for those resources becomes a key ingredient. So while there are plenty of outsourcing opportunities for payroll, whether that's an ADP or Ceridian and the like, we do also see a need and interest by a lot in this nonprofit community where bringing the payroll function in-house becomes fairly paramount in order to take control over that labor reporting and cost allocation that needs to occur as well. So again, the whole goal here is to identify a solution that is really purpose-built, soup to nuts, across all of those key functional areas and the personas within those to deliver technology that really supports all of those various pieces because they certainly have to be addressed at some point along the way. So real quickly, I'll kind of speed up here, Michelle. We've got, again, speaking to the earlier point that Mark made, and again, we're extremely excited with what Microsoft is doing through ideally a single platform, Dynamics 365, and the fact that we have the ability to address, both CRM and ERP within one platform and have all of that data work seamlessly together. And, it's an ideal scenario that I think is very unique, but one that is very much needed. This is a market that we feel has been underserved for many years, and it's beautiful to see what Microsoft is doing with the single platform, and then certainly giving us the opportunity as a partner to deliver an end-to-end solution or a full purpose-built solution based on this technology and platform and the sharing of data that's now available. Okay, next few slides. And again, these are just depictions, if you will. We didn't have time to really tee up a full software demo. But again, just to give you a sense for look and feel, for those of you that are Microsoft 365 users, you'll appreciate a lot of what the user experience looks like in these samples. But one of the first things that is kind of shown here is what we call an accountant role center, which is a very nice way of organizing daily tasks. And that can be unique by user, but a role center virtually allows tailoring of daily tasks and operations for that user to be able to see at a glance very quickly what's on their task list for the day, whether that's a series of invoices that need to be reviewed and approved, or as you see there bottom left, there's embedded analysis reporting that can be included within the role center. So right off the cuff, I've got a quick at a glance view of how things are kind of trending in this case for donation activity as a function of the ERP. So again, you're seeing the marriage between CRM and ERP come to life directly through this consolidated role center, which is a very nice experience in terms of that accountant. Next example, I think, speaks to the example we talked about: award management, grants, contracts, cooperative agreements, and this is just a depiction of a data model and what we would call an award card, where virtually I won't go through the fields that are here there, but just to give you a feel, in terms of the type of data where we're defining the funder, what kind of restrictions are in place, who is the sponsoring funder, if that's separate from the primary or direct funder in this case, the start and end date on the grant, et cetera, et cetera. So, and if there are subawards, right? If that happens to be a situation that you experience where you receive grants and then you offload portions to subawardees and other contractors to help you deliver those services. So again, having a way in which to capture and manipulate all that data as a function of the ERP is something that I think most any nonprofit would agree would be a very nice to have. Next slide. I think this is the next and final example. A nonprofit-centric chart of accounts. So we talked about encumbrances and commitments. In this example, you can see where that's exposed right against the